This video is simply about stop loss placement. So, stop loss is a big thing in terms of overall profitability, in terms of taking good trades, all this good stuff. Now, for me, depending on whether I'm in a continuation trade or a reversal, now for me, a continuation trade, to me, I'm always taking a reversal on the lower time frames or a pullback to then continue in the direction I'm looking to trade. So a continuation to me is something that price is already moving in a direction for me. I'm just looking for a pullback and then to get on to that trade, and it's usually going to be something that lasts anything from 30 minutes to a couple of hours usually at most. Whereas the other type of trade are reversal trades. Now, obviously, if you work with me, then you know what kind of trades I'm talking about. A reversal trade for me is something that is from 1 hour or 4 hour daily as well, but 1 hour, 4 hour structure, or a possible 1 hour lower high area, higher low area, or a 4 hour higher low, lower high area. So basically, it's a trade that I expect to be in, similar to dollar CAD trade that I've taken in the recent past, that I'll put a link to in the description of me analysing it and breaking it down. That to me is what I see as a reversal according to my trade plan. Now, where I want, like, what kind of protection, so my stop loss is all about protection rather than amount of pips. Now, obviously, the amount of pips matter in the sense of if it doesn't make it worthwhile, then I just won't take the trade. But let's focus on continuations first. So, continuations are trades that are something, for example, forget about the time, but just this movement. Like price is already continuing in an upward movement. You have like a pullback in this candle in comparison to the previous. So it could make sense for a buy low area on the lower time frames to then get that next push. Or again, you have this rejection candle, yes, but then price takes out the lows and it goes higher. So continuations, basically. So for a continuation trade, the stop loss placement, I want stop loss to be protected by the 1 hour. So actually, I'll just type this out. For a continuation trade, the stop loss should be protected by at least the current 1 hour low or high. So the candle, at least the current low or high of the 1 hour. So the candle that you've entered in on, so say for example, you've seen a trade and you've entered 12 to 1 o'clock UK time candle. Well, if you're looking for longs, you've entered long, your stop loss should at least be below the low of that 1 hour candle that you're entering in on. Now, there is an exception to the rule, and that is if you're looking to take a trade that's literally, it's probably going to be less than half an hour. And that is very quick trades that are very quick momentum, 1 minute entry, and you're basically just looking, it's the same process, but you're looking for protection of the last 15-minute candle essentially, and you're expecting the trade to be very quick, which can happen. There are trades out there that's applicable to that. So yeah, continuation trade should be protected by at least the current low or high of the 1 hour you are entering on. If you can get protection of the previous, so the last close candle, protection then take it. So if there's maybe, say for example, less than 5 pips of a difference between you're looking for longs, you've entered long, and there's less than 5 pips or 3 pips of a difference, depending on obviously stop loss size and pair, between the low of the current 1 hour that you're in and the low of the last 1 hour that is closed, that you're using is basically you can only work with closed candles, so it's your kind of confirmation candle. Just take that extra protection. Just take the extra protection. It makes sense. So that's a continuation trade. So let's do another one, which is reversal. I'm better just typing this out now so that it makes sense, right? Purple to make it different. Text wrap. So this is a reversal. Now, obviously, as I say, my reversal is to do with the type of trade that I take. So it's applicable to what I do, what I show, what I teach. That strategy, that thought process. It's nothing fancy. It's basically they're the rules, and I have to do it. And if it makes the risk reward not worth taking the trade or whatever, then I just don't take the trade. So a reversal would be something like a 1 hour lower high, 4 hour lower high. You're looking for that next push down, or maybe at the high of the day, low of the day, and you're looking for basically the start of the next impulse rather than getting in on a continuation of the impulse. You're looking to get in on the start because of the reasons you've got for the trade. So your stop loss should be protected by last closed 1 hour at least, and ideally by low or high of the current 4 hour candle. So it's very similar in terms of the thought process to a continuation, but obviously it's a reversal. Now this 4 hour gives, it just makes you more aware of what's happening. It just makes you think, right, well, the only way you're going to get a good reversal is if it's in a 4 hour area that makes sense anyway. So it makes sense to get stop loss protection by something on the 4 hour chart. Ideally, you want protection from the last closed 4 hour. So I'm typing this out and talking just so that you can write it down. If you're not thinking like this, look at it, use it for your own trading, do some kind of back testing on it, etc., that you can then think about it and be like, right, okay, well, this makes sense to me. And current / previous day high or low. So obviously the previous day comes into it as well. If you can enter and you're looking for longs and you can get a stop loss protected by the lows of the current 4 hour, the lows of the previous 4 hour, and the lows of the current day and previous day, and you're looking for longs, and it makes sense structure terms as well and trend, etc., that is a very, very nice trade. Even if it's just like the lows of the current day and you're looking for that, you're thinking that, well, the structure from, say, previous days or whatever, that makes sense, that you feel that price should turn around from here. So then you're looking for shorts and you have stop loss protection from the high of the day, including everything else that we've spoken about, then it's a very, very good trade in terms of the probability and the safety of your stop loss. Now, when you move your stop loss, etc., that's going to be another video. But yeah, I just wanted to kind of reiterate the types of trades that I take: continuation, reversal, Obviously, there's a very fast one that is basically the continuation, but just on a lower time frame, 50-minute, 30-minute kind of protection rather than the 1 hour due to the speed of the trade. But that's all explained in the course anyway. But that is essentially how I look at a stop loss and how I feel is the best way through all my experience and time trading and looking at charts, that you can get tighter stop losses. Don't get me wrong, like on the 5 minute, 15 minute, etc. But if your expectations, which will be another video, expectations of a trade are that it could last 2, 3, 4 hours, well, a 5 minute stop loss protection just logically doesn't make sense if you're looking to stay in the market for more than an hour or two, because other things can happen, but you can still be right. And the main thing is that you stay in a trade and you are right rather than getting tagged out because your stop loss was too tight, not letting the market do its thing, and then actually hitting your area of interest that was basically your main target that you could have had a winning trade from if you'd just given your stop loss a wee bit more room for the market to naturally maneuver, because 5 minute highs and lows, etc., they are applicable, of course, but they're only on the 5 minute chart, so they can be broken very quickly and then actually turns out to be respected. And before you know it, price is going in your direction and you're not being able to take advantage of that move because you've had your stop loss too tight. Now, it obviously can look good for yourself, thinking, "Oh, I've got this great entry," or for social media, etc. But let's be honest, this journey is all about you. This is why I do the YouTube. It's just about showing that you just need to knuckle down and do what you're doing as well as you can. Create the processes, stick to those processes, and then you're just going to get better and better by optimizing slightly here and there to make things smoother for yourself. And that's from all the time that I've spent trading. That's one of the main things that I wish I was told about from the start, was just focus on your own processes, break a trade down into different compartments, from analysis to stop loss placement, basically your trading plan, but then also the processes daily and weekly to help you execute your trading plan as well as possible, is all that really matters. Not signals, not the latest flashy word or buzzword. At the end of the day, the market is the market, and if you can learn how to read that in a way that you can trust yourself and feel confident within your own knowledge and go at it day after day, you're going to do well in this market and allow yourself to become funded and all those things that allow you to do what you want to do, which is why you've got into trading in the first place, essentially. So yeah, I hope that's been of use, and if there's anything in particular you want me to talk about in a subject matter, then let me know. I'm happy to. There's going to be a form in the description. I always would suggest you you read the description, sorry, because there's usually some words about the video and some useful links, etc., that can help you on your journey.